Hey everybody, welcome back. So today I'm going to be showing you more bull put credit spreads. I think these are really great strategies, especially if you know how to utilize them well. And so today we're going to be taking a look at the stock ticker FTX. Okay, so FTX is FedEx. FedEx, they recently had a pretty big dip. Just it went down, I think, because it's harder for them to find workers now, and because of the labor shortage. And anyways, I do think this is a great company, but don't use this as a stock that you're going to trade with. I mean, it could be a good bet, but this is more for really showing you how the put credit spreads work and how to refine them so that your probability of actually being able to realize your entire credit is really, really high. Okay, so again, we're taking a look at stock ticker FDX, and whenever I trade bull put spreads or any kind of options or any kind of trading for that matter, even if it's just buying stock, is I'm going to be taking a look at a couple technical indicators. Okay, so the first one I like to use is just simply finviz.com. So finviz.com is free and it gives you so much information that is just extremely useful. So I just typed in my stock ticker FDX, and over here you can take a look at your forward PE and your PE, so your price to earnings, your earnings per share for next year. So it just kind of tells you how much they're making and how much the value of the stock is worth. It even gives you insider ownership on how much people own within the company. And then the really important things to take a look at usually is the RSI. So the relative strength index, it tells you if it's overbought or underbought. It just basically gives you an idea of if more people are buying it or more people are selling it. And, generally speaking, if you have an RSI of under 40 or 30, it's pretty low. So it's probably a good time to buy. If it's over 50, 60, or even 70, it is overbought, and so probably may not be a good time to buy. I mean, it's not always like that, but it's just more than anything, it's a good indicator to pay attention to. Okay, so I do want to know if it's optionable, which is yes, and yeah, it just tells you the performance for the past week, the past month, quarter, year, and all that. So it looks like FedEx has been pretty hit pretty hard recently. So that's good to know. Okay, the other one technical indicator I'd like to take a look at is Yahoo Finance. This is again completely free. All these tools I'm showing you today is all completely free, so that's great. Okay, it looks like our market has been up yesterday, which is great. So we're gonna take a look at FTX. And okay, so over here, what I like to usually look at is something called Bollinger Bands. Okay, so Bollinger Bands just tells you, generally speaking, if it's a good time to buy or a good time to not buy. And the reason for this is, you want to take a look at where the line is. That there's a middle line. Okay, generally speaking, it's a little harder to explain, but there's generally a middle line where if it's trading above the middle line, it means more likely than not there's going to be some downturn. If it's under the middle line, then there's a good chance where it's going to go up a little more. Now, right now, it's kind of hard to tell because the stock has been down so much, but that's fine. It's still good to kind of take a look to see if we can know of any more indicators that can be helpful for a trade. Okay, so going back into our FDX, the way I would normally trade credit spreads is you generally don't want to generally don't want to trade something that is a little too risky. The mistake I made when I first started trading spread was I was like, okay, so you buy a put at like $2.20 and you sell a put at 3.45, which is one strike above the share price, and you're looking at a pretty good trade-off, right? If it goes up, then you earn $125. If it goes down, you lose $125. And while that may be okay for a long-term play, like if you're willing to wait like 3, 4, 5, even 6+ months for this to realize, then I think it's fine. But generally with spreads, I think most people aren't able to wait that long, especially because so there's something I realized because, like a lot of the money that you have to put in to trade is called a collateral. Okay, so let's say I open this trade. It's not that I'm just risking $125. I'm actually risking, up to $500 because, they normally require some kind of collateral for you to open this trade, right? So that really, really reduces your buying power a lot. And that's something that I never realized until I started opening a lot of trades and I was like, oh no, I can't really trade anymore because, I've already hit my limit. So that's something to just keep in mind. So generally these days, I actually like to trade short term put credit spreads, and the way that I would do it is I would definitely not do it this way, where if the stock goes down, you could lose possibly your entire trade, or if it goes up, then you would gain, right? Because more often than not, your trade can actually go down, right? Especially in this volatile market, we've seen a lot of downturn, and I think that's when, if you're trading a lot of put spreads and if the market's down, then you're going to be losing quite a bit. Okay, so in this case, I want to show you how to really reduce your risk and to also still be able to profit at a pretty reasonable rate. Okay, so we're going to actually go down. Okay, we're going to go down far into the money. Okay, so I'm taking a look at this right here. So buying a put at 220 or possibly even 222, and then selling a put at 137, 225. Okay, and the reason why this is pretty good, this is a lot better trade, is first, the probability of the chance of profit is so much higher, right? You're looking at a range between 76% to 82% as opposed to 62% to 68%, okay? And yes, your profit is going to be a lot less at $54, and you have a much greater maximum loss of 196. But take a look at this, right? So if you need to have a chart, I'll show you the chart later, but FDX has to go down by basically over 2% before you start losing money, right? So if by next week FDX doesn't go down by more than 2%, then you're still fine. In fact, you're still able to keep a little bit of money, right? In fact, actually, if it goes down all the way to 1.75%, you still realize your entire profit of $54. And yes, there is a chance where FTX can go down, like past 2%, and yes, you would lose more than your credit, and that's definitely a possibility. But the chance of that, first of all, is a lot lower. So I think if you increase your probability of your credit spread actually realizing profit, that's so much more than really kind of staying on the edge, where if it just moves down a little bit, which is very, very possible, and in fact it happens quite a bit, then you're going to start losing money. Okay, so and with other stocks, again, this is just an example, you can actually go down further, even further down the money, where your chances of profiting is just so high, right? For example, let's say even on this stock we do the spread at 217 and we sell at 220. Right now, your probability of this realizing the entire profit is between 88 to 92%. And yes, your max profit is only $19 while you're risking 231. But that's still a what, like a 8% gain, which is great, right? Like if you make 8% off of risking $231, and if you do that enough times, then your wins are going to far outweigh your losses. Okay, so now we're going to go to optionstrat.com. OptionStrat is another free tool you can find online, and we're going to actually take a look at how we can use OptionStrat to optimize our trade. Okay, so I typed in FDX. Okay, so we're going to set the expiration to October 1st. And we're going to look at the bull put spread. Okay, we're going to increase our max chance of this trade succeeding. Okay, so we're going to increase it to something to where, it's around maybe 20% or maybe even a little higher. So let's just say let's just put it at 19% return on risk. Okay, so we're going to open it up in the visualizer, and this is going to show us exactly how this trade is going to work. Okay, so on October 1st, okay, if the price of FedEx stock is anything above $25, then we made money. Okay, so if it's $225.50 on October 1st, we made $87. Okay, if it goes below $225, so if we're at 220 sorry, if we're below $224.50, if we're at $223.50, then that's when we start to lose money. All right, so I think that's pretty much it. If you guys find this content helpful, if you guys want more content like this, make sure you like, subscribe, or just leave a comment and let me know what you would like to know more about, or just hear me, talk about and make videos about. Okay, all right. I will see you guys next time.